all of a sudden you're trying to conduct this symphony of data, and that's a headache. There's human error, there's friction, there's loss, it's time consuming. And I had this realization that the projects that were coming to us were never ready to be financed. They all wanted money, but they were never ready to be financed. And so there has been no shortcut. In fact, it's been my year after year commitment to studying and working within this industry and having conversations and going to events and working on projects and joining associations and working groups. It'll be a generational change, but when it happens, and it's the last industry or sector to undergo this, it will be massive because there's hundreds of trillions of dollars in this industry, and it's going to be totally have cash in your pocket. That conceptually doesn't make a whole lot of sense because the money always has to come from somewhere. It's not like blockchain just prints money. About blockchain again, because trust has to precede AI, especially agentic decisions where it's just doing whatever it wants, whenever it wants. Well, the advice is pursue whatever you think is inevitable. Identify what you're really passionate about, what you think is going to show up in the world.
There you go. Hi everyone. Welcome to another episode of the SolveFast Labs podcast. So just to give you guys a little bit of background, this podcast is brought to you by SolveFast Labs. We help companies grow with AI, whether that's generating leads, whether that's shipping faster software, automating workflows in the organization, or scaling content within the org. So if any of that sounds interesting, message us at solvefastlabs.com and we'll be in touch. But that's completely different to what the podcast is about. We started this podcast about 4 or 5 months ago. And one of the main things that I wanted to bring to our viewers is to understand people like Matthew. What do they go through when they build a company, right? So what are the struggles? What are the gotchas? What works from that 0 to 1 journey? So, and I find interesting stuff talking to founders and people, very inspiring things that come out of these podcasts. It's just to showcase how they think, how they execute, and how they solve bottlenecks. That's the main thing that we're looking at in this podcast. So now for today's guest, I'm super excited to welcome Matthew. And Matthew, I'm just going to read a little bit about Matthew here. So Matthew is the CEO and founder of Building.inc. It's a real estate data infrastructure company. He's trying to do something that most of the industry talk about, but very few actually execute. So what he's doing is to prepare the world's commercial real estate to be audit-ready, finance-ready, and tokenization-ready. So, and a bunch of things Matthew does. Matthew is a podcaster himself as well. He is the host of Code and Concrete. He's a board member, a bunch of other things that we'll get on. So I'm looking forward to the show. I'm going to learn a lot. So it's a topic that I've always wanted to scratch the surface, and I've got Matthew today. So Matthew, with that, welcome to the show.
Thank you for having me on the show. I'm also looking forward to the conversation. I think we'll touch on a lot of fantastic topics.
Perfect. So just to kick things off, so Matthew, I see that you published a novel when you were 17, if I got this right. You traded stocks, and now you're building data infrastructure for real estate and tokenization. We'll get into all of that. That's a very wide arc. What is the journey? A little bit about how you started from that 17-year-old down to what you're doing now. If you could give us a quick snapshot of that journey, that'll be great.
Sure. Well, I knew for a while that I wanted to be an entrepreneur. Ever since I was in school and I could hardly pay attention, I realized I would probably count on myself and my own ambition and intuition in order to get anywhere in life. I bounced around between a few things. I was interested in making music, writing. I did publish a book. And then eventually I stumbled into the stock market and I started day trading. I also put together a group and we would perform fundamental and technical analysis on different companies and different instruments that were out there. We focused on options contracts and then later futures. Ultimately, though, it gave me a street knowledge of finance and banking. That's what I say, at least, because I was looking at how institutions make investment decisions. I was studying where liquidity was sitting in the market, what would drive capital deployment decisions, and I found it very interesting. However, the psychological side of day trading is very challenging, and so ultimately I was chasing after trades or I was over leveraging, and I took some losses that just set me back in day trading. I still wanted to be in finance. I wanted to be involved in that. And so someone came to me and they said, hey, he or I had been investing, because he was speaking from his perspective. He said, essentially, Matt, I've been investing in real estate. I think you should look into this market. And then he went on to explain how the barrier to entry in real estate was really high. He was writing $100,000 checks to get into syndications when on some of these projects, he wanted to be in at a quarter of the size. If he could write $25,000 per project and then split that across 4 projects instead of being $100,000 deep on one project, it would be preferable. And maybe you could drive that ticket size even lower. And I thought that was really interesting, so I started looking into what it took to invest into real estate, why the barrier to entry was traditionally higher. Was it a technology issue? Was it stubbornness from the rich, or something else? And ultimately, we landed on the fact that handling a lot of investors is pretty challenging. You have all the paperwork, you have the cap table that you have to oversee, and then distributions. So I thought, let's put together a venture that makes it easier for people to invest, and then for the project owners or the property owners to manage all of those investors. And that was my first venture around 2020. And we turned that into a marketplace where investors could look at different real estate deals, dive in if they liked it. We would help streamline some of the investment process, like signatures and wiring the funds. And we also decided that we would take a Web3 approach because it was clear that digital assets and tokenization were emerging. I had read some case studies and I thought this is probably the future. We ran into some hiccups in terms of product market fit. It's very challenging building a startup. It's also challenging building a marketplace. And then you have to make everything cost effective. You have to raise capital, not just for the projects, but for your own company. And I had this realization that the projects that were coming to us were never ready to be financed. They all wanted money, but they were never ready to be financed. And so this caused me to pivot and ultimately say, I think there's a deeper problem in the market that needs to be solved that is holding back the financing of these real estate deals, the transactions, the trust, all sorts of other things that create friction. How can I solve that? And ultimately, the common denominator was data. And I said, we're going to be a data company. I'm going to be focused on this. And that's what the past 2 years have been. First researching, then developing a product that solves all of the different problems, and I could give you a whole grocery list that exist in real estate data.
Wow, there's a lot of buzzwords there. We'll unpick all of them. I have a bunch of questions there, Matthew, for exactly around that, the stuff that you mentioned towards the later end of the response that you gave. So I'd like to take you again to your entrepreneurship, or you are self-taught, right? So you look like you're self-taught almost in everything that you do. So how do you actually teach yourself? This is more from like a selfish standpoint. And for anybody who's looking as to how to get into an industry, like what you said, where the barriers of entry are high, yet you seem to have taught finance yourself, and then you seem to have learned about real estate, you seem to know about tech. And what is the shortcut you found, if there's any?
There has been no shortcut. In fact, it's been my year after year commitment to studying and working within this industry and having conversations and going to events and working on projects and joining associations and working groups that I accumulated so much knowledge and I was able to connect dots. But I was able to do this without any sort of institutional backing. So there was never a university that I attended to get it done. There was never a major investor that lifted me up. There was no formal coaching or entity or mentor. It was just my own ambitions. I got involved in so many different things and I committed a good portion of my life to this. And so I was adamantly doing research around the clock and studying, asking uncomfortable questions, trying to really get down to the core of all the industry's problems and making sure that I really understood it, not just what exists on the surface, but also why the problems haven't been solved. What's stopping us from solving those problems? Which is always one layer deeper. You can say, here's a problem I want to solve, but you're probably not the first to have that idea. So then you have to ask, why did the other solutions fail? So there's layers to all of this, and I was really open to diving into that and investigating. So it's been my own curiosity, my own passion for the industry that has driven me to become an expert. And then you reach a point where you find a really good niche that other people are not in. So it's not a populated niche, and this gives you enough room to become an expert or a top voice in that space. And in terms of property technology, financial technology, construction, supply chain, blockchain, artificial intelligence, and how all of these different buzzwords, and don't worry, I spared you from most of them, because we could get into agentic workflows and tokenization and crypto. But when you have all these different items and you combine them, some people might be familiar with the concepts individually, but when you have this mecha concept, then you stumbled across something new, and that's what I did. And then people said this is really fascinating, but some of it, I'm not going to say it's luck because I definitely read the markets, but I did have the fortune of the market moving in this general direction anyway. So there were some tailwinds that are pushing major industries, and so all I had to do was read a couple years ahead, and then people said, wow, you're seeing the future, you're such a visionary, you've really estimated where the industries are going. And I was in the right place at the right time, and here we are, right at the inflection point and building something big.
Nice. It's always nice to speak to someone who's amalgamation of different topics. I mean, the analogy that I'd like to use is when you're studying, you try and study only maths, or you try and study only chemistry, or you don't actually study for a real problem, right? A real problem that you're going to solve might have aspects of maths, aspects of chemistry, aspects of computing. It's not the case of whether you want to learn them separately. I mean, your top-down approach is the perfect thing that everybody should be doing, right? You look at study an industry, and it looks like you've just gone on and learned whatever is necessary to understand that. That's fascinating. That's something that universities should do. I mean, given that you've kept universities away, I think that's probably the right thing to do for now that information is at your fingertips, especially with Gen AI and the latest tech. So that's great, Matthew. Then my next lead in is just to build up to the various terms that you've been using. Let's start with the most simple. Okay, so can you just let me pretend that I'm a small business owner, right? I've never touched something like commercial real estate. Can you tell us about why the property data and the commercial data in the industry is so bad, and why hasn't someone fixed it? Just let's start from the data.
Well, there's a few different ways to diagnose this problem. It could be fragmented software, which means that Lots of software has been designed, or hardware has been designed for one singular purpose. And any information pertaining to that, such as how well a particular component in a property is performing, is just going to be in that device, in a server somewhere, fed to software that's specialized in that. And it doesn't interoperate or interact with software for another components or software for managing your property or managing your portfolio. It's off on its own. It's siloed. It's isolated. So that could be an issue, because in order to be successful, you need to be able to contextualize information. You need to see the big picture. That's what they always say. You have to see, you have to understand everything that's going on, and not just have a narrow point of view. And so if all of our data is sitting narrowly, and we're trying to make these broad sweeping assumptions about how well a property is performing, we have a conundrum. And then this creates new points of friction, because what we have to do then is concentrate all of that data. We go into every single computer, every single message and file and folder and person and software, and we try to orchestrate everything. Like literally it's you're the conductor to an orchestra and saying, move this over here, make sure this is up to date, let's make sure that this information is correct. Is this the right version? This is version 2. Who has version 3? Is this out of date? Was this manipulated along the way? And now all of a sudden you're trying to conduct this symphony of data, and that's a headache. There's human error, there's friction, there's loss, it's time consuming. You end up hiring more people, but then you have to manage the people who are taking care of that. What an issue. And that can be for one property. And interestingly enough, the stakes are still very high on one property. So you're doing all of this to ensure that your $20 million project does not go under. So scale this up now across portfolios. You can see how troublesome it can become just because data is not where it's supposed to be when you want it to be, or where you want it to be, so that you can make a decision. So that's one issue. We could also introduce fraud and manipulation, or even waste and abuse. This is very prevalent in real estate and construction. Things go wrong, people don't take responsibility, or there's no accountability. We're not really sure who is uploading certain information, if the work was performed right, if someone is skimming off the top, if there's been changes. There's all sorts of opacity in the industry, and for good reason, because you can make a lot of money doing the wrong thing. So we might be making decisions off of information about a property that is not correct, but someone is hoping to get by. Maybe they did less work and charged more, and they're hoping that you don't notice. So that's an issue as well. And then there is just stubbornness in general. Maybe you introduce a new tool, a new platform, change, and change is always your biggest competitor. People don't want to change. Maybe they've worked with their hands for decades. They do a really good job. Let's say it's an electrician or a plumber or someone who, a technician, and they don't feel the need to document the work that's been done, the serial number, the changes, the new items. They don't want to learn new software, and so they simply don't go through with that. But now, as a property owner or a property manager or an asset manager, you have a gap in your system. You're missing critical information because that person didn't follow through. And then you have the headache of, well, let's contractually oblige them to upload that information, or else we're going to sue them. So it gets pretty messy pretty quickly trying to enact all of this. But all in all, across the board, there's a lot of reasons why such a tangible and antiquated industry like real estate is struggling with data, which means that it fundamentally struggles with the digital era, because everything that exists on your computer or even this Riverside window in front of us is 0 and 1s. That's data. It has to be computed and processed, and then the outcome is we see each other, or we see analytics, or we see a dashboard, or we can underwrite a property. And so real estate needs to undergo this digital transformation. It's a little uncomfortable. Maybe it'll be a generational change, but when it happens, and it's the last industry or sector to undergo this, it will be massive, because there's hundreds of trillions of dollars in this industry, and it's going to be totally transformational.
Wow. That makes sense. So where do you mentioned that obviously it's there in different people's heads, people resistant to change, people are like trying to scam in some places. Where do you start? It's just a quick follow up. How would you put this industry in the right trajectory so some of those data first practices or digital first practices come in? Where does it start? Let's say I'm building a massive project. Where does it start? Just for educational.
Well, I always give a shout out to Rick Kahn because I'm about to mention his 5 pillars, and it starts with purpose. So, as a tech operator, I sit at step number 4, and we'll get there, which is platform. We have a platform, but we approach this differently because we know everything starts with purpose. Why did we actually create this technology? Why does it have to exist? What's going wrong on the job site right now? And how do we help the people in the field understand their role and responsibility in the grand scheme of things? You may not see it as immediately important to record certain information or to go through with the details, to use a certain piece of software, but if we can communicate how important it is to the value chain and the life cycle of the project, then maybe they will be more inclined to participate and follow through on that. After purpose, you have people. So if you understand why this has to happen, then who are the people that we support? How can we support them? Do we have to offer education? Do we have to offer tools or incentives? How do we get them to care? And then you can move very cleanly from people to process. If people are able to follow a process and it's very routine, it's structured, it's understandable, then typically they will execute it. If you don't tell them what to do, they won't do it. But if you can outline a step process and you say, follow these rules, here's the protocol, we're going to help you along the way. If you miss a step, we can go back and fix that. Here's the process, make it repeatable, because things that are repeatable are more scalable. It's not just coming up with something along the way. We say for every single property, here's how you sign on, here's how you upload the information, and then step 3, sign off on it, or whatever your process is. And then step number 4 is when you start designing technology around the purpose, the people, and the process. You understand what problem you're solving, who needs to be responsible for it, and what they have to do, and then you can just turn that into a product. You can productize it and say, okay, here's where you drag and drop your files. Here's the green check mark that says you're complete, or here's the red X that says there was an issue. And then within that platform, generally, you get to the 5th pillar, which is all about performance. Can we see if the job was well done? Where was the friction in performing all of this? And what can we improve upon so that the next development is even smoother? And this is how you reach scale. If we are constantly learning from our performance and making improvements, then things get better over time. They become easier to do. We can teach other people and bring on more practitioners and more people using the platform and scale it up from there, from one property to even hundreds.
That's very interesting. One is, I'm going to say it anyway. So, will this become easier when the likes of figure AI or when construction industry becomes dominated by robots?
Maybe robots. So there's different layers to automation. There's physical automation, which is where you start to see robots. They're conducting a particular task over and over. And this has been very widespread in manufacturing for decades. And I mean, like automobile manufacturing. Sometimes people are in the factory or on site performing a task, but a lot of it is very roboticized. Then there's digital automation, which is like agentic workflows. So if I upload a document, can we automatically extract information, categorize the document, update a model, and then notify someone on the other end that it's ready for review? Just it happens one by one. You push the first domino, and the rest fall into place. So ultimately, it comes down to where is the demand? Where is the demand? Where is this needed most? And I would say on the construction side of things, robots and heavy machinery, there's a big opportunity to support with automation because of two factors. One, the labor shortage. So for some jobs, especially very risky jobs, there's not too many people available. And so if there are no people available, but the job still has to get done, then you turn to robots. And second is that safety portion where a particular job might be too risky. And you're starting to see this in oil and gas and manufacturing and machinery, heavy machinery, where people might lose fingers or they could get crushed by something. So if we can put in a dispensable robot that performs that same task, but it's being piloted by a skilled individual on the other end. So they still do their job, their expertise is still required, but their life is no longer at risk. Then it's very, very practical. And you can imagine like carrying heavy loads or being on tall structures, right? So you're dealing with heights and gravity. That all introduces risks. And then what's going to be interesting is how the performance or whatever those robots are doing, if that can be relayed digitally, so then we're looking at like sensor data on our computer. So whether that's a robot or an IoT device, if it's reporting immediately to our, not necessarily our platform, but a platform in general, and then you're looking at all the analytics and the data pertaining to that, and then I think it's going to be really interesting how artificial intelligence infuses into that, because if you have a robot performing a job and you can identify if it did the job well or not and how to fix that, and then you reprogram that into the robot, which is machine learning, and it gets better over time. That's going to be fascinating to see how we conduct that and what new possibilities emerge.
Yeah. No, thanks for shedding your perspective on that, Matthew. So I'd like to take you back onto the vision, the one that you mentioned. You mentioned about how the whole property and the real estate industry is trillions of dollars, and the data isn't there yet to kind of exploit that market, so to say, right? So, and one of the big things that I know you've been pushing as part of Building Inc. is tokenization, right? So I want to get there, but before we go deeper, right? So on your vision, so we'll work up to that. Help me and the listeners understand the foundation. So how does something like Web 3.0, blockchain, and real estate data marry, right? So in simple terms, if you were to explain it to someone, what would your explanation be?
Well, let's start with blockchain. So blockchain is a ledger, and it happens to be a decentralized ledger, and generally it's an immutable ledger. So let's unpack each of those words. You can put blockchain aside and we'll just call it a ledger. What does it mean if it's a decentralized ledger? Well, the contrary to that would be a centralized ledger. Centralized means it's under one person, one entity's control. They're overlooking it. And what are they overlooking? The ledger. They're in control of the transactions. It's their books. They're recording who, they're recording what, they're recording how, and they're responsible for that. Sometimes that's a state government, the federal government, a corporation, an institution. They're responsible for recording that. And what happens over time is that you become dependent on them doing their job correctly to know who was involved in a transaction, what was transacted, how it was conducted. So there's an alternative. What if you didn't have one person or entity in control of recording or responsible for recording that transaction? And that means it's a decentralized ledger. It's a ledger that we all share, just like Google Drive or anything online, cloud-based. We're collaborative, we're working together. We can all see the updates as they come in, the transactions as they're conducted, and we each get a share. We each get a copy of that. And now you're not relying on one party to record and report things correctly. We're able to uniformly see this. It's distributed across all the parties, it's shared. And then there's one more attribute, which is the immutable portion, which means if we all have a copy, one party can't just go back in time and make changes to that. Blockchains are designed in a way where they're built one record on top of another, and you can't, it's not like a Jenga tower where you can pull out a block from beneath. It's impossible. And so now you have this immutable history of all the transactions. No one can go back and change that, and we're all looking at that shared record. Okay, so now where is this applicable? And interestingly enough, I did a guest lecture at Emory University where I explained why would a decentralized ledger be practical to anyone. And it's really, really useful. If I were to distill it, sum it up, it's really, really useful when you have a lot of parties, multiple stakeholders that are all counting on receiving the same information and trusting that. That's it. If there's a lot of people who are counting on the information being correct so that they can make a decision, it's a great idea to use a decentralized ledger. Because the alternative is that they each have their own record, their own books, their own version of the truth, and they're trying to share it with each other. They're sending it back and forth, and this introduces potential outdatedness or stale information. It could be corrupted, it could be manipulated, it could be selectively disclosed, which means you're not receiving the full truth. People will say, well, I told half a truth. So we want multiple parties to be able to look at the same information, and what we call this is information symmetry or data symmetry. Things are asymmetrical when different parties have different versions of the truth. You don't know what the other party knows. So we want symmetry across the board. This is what blockchains are really good for. We're recording transactions, ownership, identities, assets, and it's all done in a format where we have a shared version of that truth versus our own. Okay, so what's an industry or sector that has a lot of parties, has a lot of different versions of the truth traditionally, and this creates all sorts of friction or creates risk or opacity and loss? Real estate, finance, banking, supply chain, those are all really good examples, but real estate in particular, there can be dozens of parties involved across procurement, supply chain, construction, design, operations, financing, brokering, transacting, maintaining, and then as you create different financial instruments out of that, many different parties, they're all recording their truth separately. They're collecting whatever data they can. They hold it in their systems. It could already be out of date by the time they receive it, and someone else has the most up-to-date version, and that creates asymmetry. And again, going back to the beginning of the conversation, this could be because the systems are siloed and so information doesn't move, or it's not designed for another piece of software. People don't want to share it because they're trying to get an advantage over you, whatever it is. And so we said blockchain really makes sense in real estate, not just on financing or tokenizing the ownership, but just for handling data in general, because files, documents, data sets, they need to be universally shared across the stakeholders of the project as much as possible without encroaching into the leakage of intellectual property or privacy concerns. And we have solutions for that as well. But ultimately we said, let's get the data across the board. Let's have symmetry, let's have transparency, and then this is the foundation for data-driven decisions, as well as honesty and lower risk and the greater deployment of capital and better operations for properties. And properties are the makeup of our cities, so maybe our cities will get a little bit better. If you can imagine the ripple effect that's happening here. That's what we said, that's what we hope to see. So I think blockchain is really opportunistic for a future where data symmetry, but also privacy are very important to everyone, especially major industries.
Wow, thanks a lot for unpacking that, Matthew. I think, like what you said, the other thing that I was reading just in preparation for this is once you're able to put it in the blockchain, you also can, I guess, verify. Different people can also use that data in an easy manner, right? You don't have to, you're not waiting for the truth from a county or office, or you're not waiting for a piece of document to be sent to you, or go to a office to look it up, or it's all there for you to look, and the legitimacy of that is not questioned as well, right? So that's a massive advantage. So I have two more questions following up on the wonderful explanation that you've given, Matthews. One is, if tokenization is the next big thing, and I can clearly see it is, has it's been for about few years now. Why hasn't it taken off? Or if it has, in what scale has it taken off? That's my first question. Second is predict that into the future. If things do go on to plan, and if tokenization works the way you think, or as part of your company, if it works the way you think it will, what does real estate investing look like for a normal person in, let's say, 10 years?
Great questions. All right, so looking at the current state of the markets, I believe we're at like $29 billion worth of real world assets being tokenized. And as I mentioned before, blockchain and tokenization is useful in many different industries. So that $29 billion doesn't just represent real estate, it's also private credit, private equity, treasuries or treasury bills, other investment items, and those are all handled by different institutions or different issuers, but they have the same problems that real estate has, which is they have different books, like where they're recording information and keeping track of all the numbers, and this leads to delays, it leads to diligence and reconciliation, and that slows everything down. So they had the same idea that you could record information on a shared ledger, hold assets on a shared ledger, and you always know the state of those assets, what they're doing, what their value is, what their dependencies are. And that's very useful. You can move capital more freely, you have less risk, so you have more collateralization options. So $29 billion, but real estate is really a tiny, very tiny percentage of that. And that's because, in our opinion, and according to our thesis, tokenization in isolation doesn't solve enough of a problem. In fact, introducing technology without having a really strong foundation, like think back to the 5 pillars, if you don't have a good purpose, if you don't have people who understand it, if you don't have a process in place and you just jump to tokenization, you can introduce more friction. You're going to have integration costs, you're going to have legal fees, there's going to be really high expectations, and maybe the benefits aren't delivered. And tokenization has certainly gone through that. People misconstrued what tokenization of real estate, whether that's of data or ownership, what it could accomplish. They said there would be immediate liquidity. And I can't believe that people said there's going to be immediate liquidity, that you could just sell things and instantly have cash in your pocket. That conceptually doesn't make a whole lot of sense, because the money always has to come from somewhere. It's not like blockchain just prints money and sends it to you. So the idea of liquidity, secondary markets, or people were trying to bypass regulation and laws and just use blockchains to get around that. And I think that's pretty ridiculous. So it held back the industry when early projects failed, or they used blockchain inappropriately, or they made big promises that couldn't be met. And consequential projects or follow-up projects didn't succeed. They didn't get funding. They didn't reach any scale. Or customers did not become repeat customers. They didn't see a reason to do so. And so we said, we still believe in a future where digital assets and digital instruments or tokens are prevalent. It makes sense. You want a shared ledger. You want information symmetry. You want to be able to move things faster and have less risk when doing so. However, there has to be a stronger foundation. And in real estate, above all, that foundation has to be set. It has to be solid before you build on top of that. If you create tokens and new ways to invest, but you're not taking care of the underlying real estate, or if you don't have a way to record the maintenance that's being done, if your stakeholders aren't aligned, if you don't understand the specialized software involved, or if the data is not interoperable, it's the wrong file type. Like, has anyone ever sent you a file and you can't open it? That happens all the time in real estate. And someone says, here's all the information you need, send, you receive it, and you're like, I don't know how do I open this? Like, I don't even know, like, this is a .xslcr, like, what is that? So that happens, and now people are saying, well, that's a house of cards. On top of that, let's try to balance a whole new economy. Guess what? It didn't work out. You still have to understand real estate. You have to understand capital markets. And so that's the approach that we took. We said, let's build better real estate. Let's help with the digitization of that. And then we can work on tokenization. You have to follow the process and work your way into tokenization. If you do that correctly, then tokens are going to be very valuable because they're going to be backed up by data that's collected on site from that property, and it's real time, it's flowing, it's been verified, it's been fingerprinted, it's gone through all the processing, and AI is going to help out a lot there. Then tokens are going to show you property's doing well, property's healthy, property is paying you, the debt is no issues there, no defaults. But all that starts upstream with the property itself. When that happens, tokenization will reach scale. The other things that have been tokenized at scale don't have all of those complexities. They don't. Like treasuries, interest rates, ratings, that's about it. Collect that information and then just make sure that it's been issued. Or bonds, if it's a corporate bond, municipal bond, is it legit? If the answer is yes, well, the government's backing it, you're pretty much safe to invest in it. There's nothing more to it than that. Real estate has 100 questions you have to answer before you invest. So that's what I think. That's the elephant in the room. And then I think the third question was, in 10 years, what does it look like from an investment perspective? I don't 100% agree that real estate will be traded like stocks, because real estate is not designed to have the volatility that a lot of stocks or different instruments have. Maybe there will be derivatives of real estate and people will speculate on it a little bit more. But what I do think is that private real estate in particular is going to be more transparent, less risky. It will have better price discovery. It'll be easier to hold on a balance sheet or in your portfolio because it's finally going to be data driven while still preserving the privacy that private market assets count on. And so people will hold more alts, whether that's private equity, private real estate, private credit, venture capital. They'll hold that in their portfolio with confidence and not feeling that they're over allocated. Because they're going to see real-time performance and it'll be snug right up against bonds, mutual funds, or equities, public equities in their portfolio. Same data, same reporting, same confidence in that, just a different asset class. And that's going to be really valuable because you want things that are non-correlative, that can hedge against one another in the case of something going wrong. So we need that change. That's what's going to happen. People will seamlessly have real estate in their portfolio. Doesn't mean they're going to be day trading it. I think that's silly, but they'll have more confidence in that and it'll have better accounting treatment overall, which is great because we need more money flowing into real estate and infrastructure.
Sounds good. I mean, the one aspect I was thinking of, not more of the trading in the stock market, but I guess it's going to be if you do get to that tokenized, more buildings are tokenized, I guess ownership becomes a little bit more easier, right? That's the only thing I was, in a naive sense, reading at this from somebody who doesn't understand. It looks like you could buy a portion of a building far more easier, and buy and sell becomes a lot more easier compared to, I guess, in that sense.
Yeah, that's true as well.
Yeah,
the transaction size will definitely become easier.
Yeah, like going back to your earlier conversation, which you said, somebody told you that I don't want to invest $100,000. I want to preferably invest $25,000. I guess that'll make it, I guess, easier, I guess, with the whole tokenization. So, so thanks for explaining that again, Matthew. You've one question, and you kind of answered that, but I will ask that anyway because I noted that down as I was doing some research. So obviously, blockchain solves the fact that you can't tamper the data after the fact because of what you mentioned, blocks and immutability and all of that kind of stuff, good stuff. But it actually doesn't solve whether the data was honest when it went in, right? So an inspector can obviously sign on a bad building. An appraiser can still overvalue a property. At what point are you guys tackling some of that problems? Or are you saying fundamentally it's trust the signers, make them liable, or the blockchain is like the audit layer. So what are your thoughts on that?
Well, you've definitely alluded to it. As of right now, we can't guarantee that the data itself is good. We don't produce it, we don't sign off on it. We're just stewards of it. We help it to get from point A to point B, but we do make that auditable. We make it so that you can go back and you can see the state of the data file, document, or data set at a given time, and then understand the who, what, where, how, when, and why.
Mm.
And especially doing it on an immutable ledger, this creates a lot of confidence and it opens the door for accountability. So in order for a document to receive that digital fingerprint that I mentioned, or a SHA-256 hash that gets anchored to the blockchain, there are some requirements. So it has to be uploaded, processed, indexed, then it needs to be verified, it has to be attested, and then it's going to receive a hash. And the hash creates independent verification, because if you receive a document and you're wondering, is this the latest version, or what's the metadata? What do I know about this document, how it's been produced, why it was sent? I can inspect that, and when I inspect that, it's based off of blockchain. So that gives me cryptographic proof of not only the state of the document, but all the information pertaining to it. But you only get that cryptographic proof if you follow all of the steps. Otherwise, you don't earn that, because we don't want to offer cryptographic proof and validation of a document if people haven't signed off on it, or if it hasn't been properly prepared. Then it could just be any random document that's been uploaded. So we flag all those states of the document in our platform, and we have like 9 steps that you can go through the maturation of the data, and then a couple of variables, like if it becomes stale or if it's been superseded. And this is visible within the platform, and it would be visible on chain eventually, not currently, but that metadata will be visible. And this just helps people understand the state of the data. And so what happens is that down the line, if something breaks, or if there's a dependency, or if there's a dispute, or if reconciliation has to be done, and we go back and we say, let's see the source, where did this originate from, how did the problem start? We can find the document, we can find the system that produced it, the people who signed off on it, the date, the time, all of that critical information, and we can see that, we can inspect it and understand it without the shadow of a doubt. And that's very important, because there are some solutions out there that are trying to offer timestamps, or just holding data, or you produce it in court during the discovery period, but that doesn't necessarily prove anything. We wanted to offer proof. And there's no better proof than a cryptographic proof, especially when it's based off of blockchain. And many of these blockchains are becoming quantum resistant as well. So at that point, it's like it's pretty much truth. Now, we're not saying that the data itself is accurate, but the state of the data, or the existence of the data and the understanding of it at that given time, is truth as we know it until proven otherwise. So yeah, I think that's a really good point to bring up. And then what we're trying to do is, with artificial intelligence, if we can inspect and process those documents, if we can parse or extract key data from those documents, if we can do reconciliation checks, so do 2 documents contradict one another, can we flag that and bring that to review? Could we scrape public data, and which is usually held with like an authority, and see if that contradicts some of the private and like developer produced data? Because if I produce numbers and they don't stack up against what the government says, the government is going to take precedent. So that's something I need to be aware of. So there's definitely different tools that we can introduce along the way, but ultimately we can never mitigate that risk entirely, but we can definitely make it inspectable, auditable, and then encourage some more accountability in real estate.
Well, thorough answer there, Matthew. Thanks for going into the detail there. So one last question before I want to move into what your day looks like. But I just wanted to ask your opinion on among the different countries. Obviously, it looks like you involved, if my research is correct, you're involved in blockchain in Saudi, Hong Kong, Science Park partnerships. So this is not a US only play, but if I were to ask you, who's actually ahead in this whole play, in this whole tokenization, in this vision that you have, which countries are more aligned, and which ones do you think will get there quicker?
Well, it depends because tokenization takes many shapes and forms. The US is definitely leading in terms of tokenized treasuries because we mandate it for stablecoin issuance, and that's because we want it to be a crypto capital of the world. However, other jurisdictions are looking at putting real estate ownership natively on the blockchain. This is what the Dubai Land Department was working on. This is what is part of the Saudi Arabian 2030 vision. They said, let's use blockchains as a native registry for ownership or documentation. So that's really trailblazing. We really haven't seen that in the US. We've seen some efforts to record or at least duplicate title and deed using blockchain, but it's never native to the blockchain. It's just a digital twin. It's a copy. And this is an issue because if the government still gets something wrong, or if they're doing a paper copy or there's some dispute, the blockchain backup is not super useful because the government they rely on their own internal systems. So at that point, what's the purpose of having a duplicate on a blockchain somewhere, especially if it's not immediately correlative? You can make changes in the real world and they don't show up on the blockchain, and then the blockchain, even though it's immutable, is incorrect.
Mm.
It's better to issue things or operate natively from the blockchain. The problem is the entire world as we know it does not exist on blockchains, and so you have to build out that infrastructure, make the transition, look for any risks, and there are some risks in the technology, stamp those out. So different regions are approaching it in their respective ways. In Hong Kong, they talk a lot about the green transition and the tokenized Hong Kong dollar or the e-Hong Kong dollar. There's some financial institution initiatives. Beijing is doing a little bit with the CBDC. So there's all these different global efforts. Some are leading in some ways. We'll see what becomes most valuable long term. It's hard to say if anyone has the right approach. It's really interesting to see all the different sandboxes that emerge. And I think that's actually for the better because if every region focuses on something unique, they run their sandboxes, we see what works and study that and then apply it locally. That's for the better. It's like many different science experiments are going on and we're all going to learn from one another. I'd say that's all that really stands out. Maybe in emerging economies, you're seeing some rapid adoption of blockchain, stablecoins, cryptocurrencies, and tokenization because it has sovereignty, it has some autonomy, some independence, some new opportunity that comes with that, and new business models, new economic models. So that's pretty interesting, but we're almost in like a standstill until the infrastructure catches up. People got very excited, and then of course there's so much capital going into artificial intelligence right now, and yet interestingly enough, artificial intelligence really, in order for it to operate successfully, especially in an enterprise environment, it needs data and trust beneath it. And we're getting to the point that the AI is scraping bad data. Like 50% of the answers are coming from Reddit, which means it's someone's opinion. Or you can't get it to admit that it's hallucinating. And so it's giving you answers that are not grounded in truth. Or there's been leakage of intellectual property. There's all these issues. People really skipped over the data and trust layer. So to think that, I saw that the U.S. Deployed like $280 billion, and this is U.S. government, U.S. venture capital firms, private equity investors, $280 billion into AI, and and data centers, and we're not really thinking about what it needs, what this technology needs to operate successfully at scale and in a trustworthy manner, or even talking about infrastructure and energy. Like our ability to process or use AI is very dependent on if we have good infrastructure. So we skipped a couple steps, and I think it's going to bite us or bite the country eventually. And then maybe people will talk about blockchain again, because trust has to precede AI, especially agentic decisions where it's just doing whatever it wants, whenever it wants. Really? No, you need trusted data, unless, or you're going to have a catastrophe.
Yeah, yeah, very, very good. Very interesting points there about skipping a beat, so to say, and jumping onto AI. It is a problem. Everybody says now that the data is the moat, so to say, but I guess real data that you can trust is the moat from what you're saying, right? So I think that's super important. So moving on, we are coming close to the hour here. So I just wanted to quickly get your thoughts on what your day looks like, Matthew. Clearly, you do a lot of things. You're not just doing. It looks like you're hands-on doing the product, but you're doing other bits around podcasting, doing other things around events. Can you tell us what your day looks like or a week looks like for you, Matthew?
Whole lot less interesting than you might think. Lots of studying, lots of researching, lots of calls, figuring out what's going on in the industry, working on product, having investor conversations. The more interesting thing, but this is not my day to day, is when I get to go to events. It's really fascinating, all of the different blockchain events that are happening around the world. It's like
Mm.
every country has their own blockchain event going on. I try to attend a lot of them. I try to speak at them as well. So I've been in many unique rooms, behind podiums giving keynotes or sitting on panels talking about what's happening in the industry. I think that's uh, I have a lot of gratitude that I get to be able to do that. So that's cool. But most of my time is spent learning and understanding what's happening.
Mm.
This is truly, I mean, these industries are changing very rapidly. So you have to stay on the cutting edge. You have to stay at the edge of it to have an advantage here. Um, every day there's a new update coming out, and it seems to flip the whole world on its head. So I'm always trying to stay ahead of that and then see how I can apply it to different problems that we're solving in the industry.
Sounds good. So, as part of that, just to follow up, what part of the week do you think you wish you spent more time on, but it keeps getting squeezed?
That's a pretty good question. Let's see what I think. You know, um, maybe working with working with investors. So we're opening a seed round, and it is pretty time consuming sourcing investors, building up the relationships with them, sending over information. So just where we're at, I need to and commit a little bit more time to that. But at the same time, you also have to run your business full time. So fundraising is its own full time job that conflicts with the job of running a company. So I need to spend a little bit more time on that to make sure that we keep greasing the machine. And let's see, like to a little bit more time to just sit down and read. I need to do that. Just sit down, be quiet, and read. I can't always convince myself.
Read more about your topics or just outside of what you're doing?
A little bit of both. I think it's great when I wander off the path and discover something new that I can apply to an industry I'm already familiar with, and kind of expanding my horizon.
Horizon. Makes sense. Cool. So just moving on to you mentioned a little bit about the business itself, bottlenecks and stuff like that. So you you're not just selling a product, right? You're educating a market at this point in time. What's the hardest part of that right now? Is it like there's a lot of awareness, or is it trust, or is it like onboarding, or what is what's the hardest part?
Well, it's a little bit of everything. Education is an important piece. We have to get people to care. We have to give them the resources to understand what's going on. It has to be digestible. And AI is helping a lot there, and good graphics and good conversations. Going to events and having those direct conversations or panels or workshops and just letting people get hands-on with stuff is very important. Then you have to encourage people, especially when these AI tools, it's almost like dangling keys in front of a baby. Look at this. It's shiny. It's jingling and making noise. A lot of the tools are like that right now, and so people think that they have everything figured out because they can buy ChatGPT for $20 and it's going to solve their portfolio issues. And they learn pretty quickly that it's not a complete solution. It has issues, it doesn't integrate with everything, or they're dragging and dropping, they're creating new frictions. They thought that they could just fire people and replace them with AI. It doesn't operate that way. So
Yeah.
we have to remind people to not be distracted by the shiny objects and to have real plans in place, understand the software that's available to them, have a digital transformation plan, and then also not skip over the layers that we deem are very important, which are data and trust. Everyone wants to be more intelligent. They want to have that intelligence woven into their portfolio, but got to go back to the basics sometimes. It's first principles. You have to abide by those. They exist for a reason. So grounding people in reality, I think that's pretty important. Other than that, I don't know if there's any major issues. You just got to get the industry to focus, to change, to understand why that change is important, and to work towards it. Have the right incentives in place to work towards it.
Sounds good. So just and just another question on just specific to building itself, building.inc. So I call this the magic wand question. So here, let's say you've got a magic wand, Harry Potter style, and if there is one aspect of your business that you want to wave off the wand and it will disappear, it could be anything really. It could be marketing, it could be whatever, right? Development, education, something that's actually crippling you from growing as much as you want to. What would that be?
Well, my least favorite part of the job right now is fundraising. It's a lot of outreach. It's a lot of no's, 99 no's just to get a yes. It's almost like sales, but sales is fun. I like talking to clients. And I like marketing, and I like building product and operations. I like traveling. All that stuff is great. It's part of the business. I knew what I was signing up for. Fundraising though it's like herding cats. They're all over the place. They all have the mind of their own. And you're like, nope, nope, nope. Get in line. Focus. Look here. No shiny objects. No squirrels. Because again, investors will latch on to whoever has the most buzzwords, or they'll just invest in old trends. And when you see that in a portfolio, it can be a little dismaying, because I've seen a lot of projects fail over the years, and it can become frustrating because, I'm not saying I know everything, but I thought that there were red flags or obvious signs, and the investors thought otherwise. So those conversations can sometimes feel like they're very circular and they're not getting anywhere. And if I could just fix the VC scene, that would be fantastic. It would be great, not just for us, but for many companies.
Yeah. Like what you said, the part of the problem is the amount of capital that's being diverted towards AI, right? It just doesn't help normal businesses get a portion of that, right? So that's part of the problem as well.
Right.
So
Yeah, and here's a fun fact. 90% of startups fail even with venture capital backing. So every VC believes that they have a unique strategy to find the winners, but that's not true. And just deploying capital into a company doesn't make it more successful. You still need to know what you're doing and have a good product execution plan and a team. So I just keep that in
tell
mind.
me, tell me more about it. Yeah, it's hard. One of the things that I remember is one of my friends who's he has a found. I think he's trying to raise funds for like not a gross online niche. It's a niche grocery shop. They're trying to expand everywhere. He says it's so hard convincing investors. Moment you touch brick and mortar, even though he's provided value, he's shown he can grow, he's expanded into 3 places, but he says nobody wants to even touch it, right? So it's interesting. Whereas if you come up with something nowadays, if you have an idea and don't even have to have a product, and sometimes you're valued at $1 billion, right? So it's crazy. It's absolutely crazy. Like what you said, they don't know. It's just going behind the buzzwords. So I'm going to come to the end of the podcast, but before that, I just one last question, right? So you've done a lot, Matthew. So I mean, speaking to you has been a education for me, and thanks for explaining a lot of the stuff. Um, but I want to ask you, what if somebody is thinking of starting something in this area, right? They want to do a startup, they want to venture into this, graduates, couple of different people, maybe people are looking to start up in this area of yours, or people are looking to get into the career and then start a career in real estate, technology, data, blockchain, all of that. What would your advice be for them?
Well, the advice is pursue whatever you think is inevitable. Identify what you're really passionate about, what you think is going to show up in the world, whether or not people like it, and go after that. Study it, research it, figure it out. Because you're really going to have to believe in something in order to build a company around it, to get started. Or even if you're not trying to take on a leadership role and you just want to be part of something and you're going to work on it for decades, you better hope that it's part of the future. And you better enjoy it if you're going to commit so much of your life to it. So identify what's inevitable. And I think that that feeling of inevitability is really important, especially for founders too, because if you don't think that it's inevitable and that it has a likelihood that it might fail, or it's just a vision, a wish and a dream, that does not inspire confidence in yourself, because you're going to go through difficult times and wonder what it's all for. It doesn't inspire confidence in investors and teammates and partners. So you need to think that this is absolutely destiny. This is fate. We're headed in the right direction. We're working on something that has to happen. The world is going to be a better place when it does. Be extraordinarily passionate about it. You have to be able to sacrifice so much of your time in order to study, to have conversations, to go places, to sit on planes for 24 hours, or be nose down in books that don't make sense, or whatever. You have to be so fiery passionate about it that you're willing to go through hell in order to get to the other end. And you will have to be willing to be deemed a little bit crazy at times. People will give you a couple different labels. Maybe it'll be passionate, maybe it'll be crazy, maybe it'll be visionary if you're lucky. But you will have to understand the topic so well and be so enthused by it and so enveloped by what it's capable of that you understand it more than other people, and you're willing to make bigger bets on it than other people. And that will captivate them. They'll think that this person sees something that we're not seeing quite yet. But unless this person's totally crazy, if they're a complete idiot, we're willing to make a bet on them. Maybe they're right. They've made the commitment. They're passionate about it. Maybe they know something that we as a community don't. And you want to be that figure that people are placing bets on just because you are more passionate, you are more driven, you are just absolutely wrapped up in whatever you're pursuing. That's my advice.
Wow. I mean, coming from a truly passionate person, thanks, Matthew. That's been unbelievable to have you here in this podcast. So, hope the viewers loved it as well as much as I did doing this podcast with Matthew. So, until then, thanks a lot.
Thank you.